Welcome back, everyone, to Vox Markets Live. My name is Paul Hill. I'm delighted again to be able to speak to Iain Staples, professional investor and director at CEN Group. So welcome, Iain.
Hi, good morning.
Yeah, it's great to have you back on the show, especially given the sort of strong 15-20% rebound in equities from their Liberation Day low in April. But I guess the big question of the moment is this rally sustainable, or is it more of a sort of a dead cat bounce? So what are your thoughts, Iain?
I think we're pretty much done with the rally. I think the market has got used to the fact that Trump says one thing and does another. And there's a very interesting article on Substack by Ben Ansell. And he calls it the taco trade. Trump always chickens out. And
I think taco trade.
The taco trade, yeah. Or the taco, however you want to pronounce. I don't know how you pronounce Mexican chips, but I think that's the situation where we are now. There's a lot of bluster, a lot of negotiating noise. A deal is struck and then it changes, and then it about 3 or 4 days or 5 days after it changes again, and we're pretty much back to where we were before. But the kaleidoscope's been given a good shake. So I think the market is now beginning to realize that you've got someone in charge in the most powerful country in the world that says one thing and does another. And at times like this, I'm always watch bond yields very carefully. Certainly at the long end of the curve. Look at the 10-year yield, 20 and 30-year, the long money. Certainly in the UK, that's going up, but that's following a pattern that the US is leading. You've got his big, beautiful bill that's going to add just an obscene amount of extra debt onto the US balance sheet. And, depending on who you read, you could say, well, is the US dollar going to remain a reserve currency or not? What are the Chinese doing to try and usurp the dollar's strength? And the bond market, certainly at the 10 to 30 year end, yields are increasing quite markedly. We've got the UK's own spending review on Wednesday, although the UK economy is a bit like a candle in a false 10 hurricane in the relevance to the US. But I do think we might well see another sort of not seismic, but a strong shift upwards in bond yields, which is never good for equities. So I think why
is that? Why would you see an extra increase? Because if anything, the Fed and the Bank of England are refraining from issuing at that level because they realise they can't sell it, and that inflation is coming down. I get it with the steepness of the yield curve, about 1% at the moment, sort of 2 and 10 years. But why would a 30-year bond, say in the UK, which is like 5.3%, why would it increase much higher?
Well, I think there's the fact that we haven't got the public sector, the triple lock on pensions under control. I don't think we've got public sector spending under control. And I think there's almost a profligacy in terms of the willingness to raise taxes rather than cure some rather fundamental structural problems. It might well be different labels either here in the UK or in the US, but you've got quite a seismic demographic shift as the population gets ever older, and the proportion of people that are aged over 65, 70, drawing those pensions, not sort of, earn the privilege not to work, but it's a burden on the state. And I think the fact that the interest payments on the UK national debt exceeds spending on the national health and on defence, I think is...
I don't think it exceeds the National Health Service. It's certainly education and defence.
Yeah, okay, but it's a significant load on the public purse, and I think people are going to be very wary and watch very carefully about what our Chancellor is going to say in Parliament on Wednesday.
Yeah, no, you're right. Well, certainly with the steepness of the yield curve, it helps the people like the banks. There are opportunities because I think likes of Lloyds and NatWest and Barclays and HSBC, particularly Lloyds, has done pretty well, actually. I think the shares...
Yeah, the banks do okay.
Yeah, that's right, yeah. All right, okay. Well, we've got plenty of good stocks to run through. There are some opportunities, obviously, in certain sectors. If you want to ask Ian a question, please put them into the chat bot, and I'll read them out. Let's start off with the sort of the rocket ship sector at the moment, which is defence, and it's been intimated through the spending review that the NHS and the defence is going to continue to get more government funding. Let's kick off with a small cap. Let's go for Cohort, which is an AIM stock that serves sort of information and cyber warfare, plus sort of like sensors and stuff like that. It's got a huge order book. Shares have been absolute like a rocket ship, one of the sort of the missiles going up a rocket. Yep. How do you see this one going forward? It's not cheap now. It sort of trades at roughly 25, 27 times PE.
No, this is one I've had for a while, and it's certainly, I think there's a theme over the next 10, 15, 10 years, a realization that the world is changing in terms of the commitment. I think thanks to that strong order intake, and the order book underpins something like 230 million of current market revenue expectations for the new financial year. Given it's got sort of a portfolio approach to defence spending, it's got our fingers in quite a few pies, sort of specialist technology as well as training, British Defence Forces, as well as members of the friendly members of the Commonwealth. So I think this has got much further to go. It's up until recently, it was quite not particularly well known. So look, you got £4 at the end of 2023. It's really come through, and the excellence of each of the divisions being put together by Andy Thomas and the team. It's finally been reflected in the share price performance.
Yeah, I mean, it's now 750 million market cap, and I guess it could go up to the main market actually to get more international
it's a trend,
investors.
Isn't it? I mean, it's what capitalized. You'd say 750 million market cap also.
Yeah, that's right.
Sort of. I can't remember the shareholder structure. I think the chairman Nick Brest might have something to say if he's got a significant holding. But certainly, you've seen quite a few companies over the past 3 or 4 months try and find more liquidity or a different type of investor by moving to the main list.
Yeah, no, I got the big call wrong, because at the start of the year I was tilting towards more of sort of like Trump would be able to solve the Ukraine-Russia war. Now I've got the feeling actually hasn't got a hope in hell, because Putin is just playing the stalling game, and he knows he's got more sort of brute force in that side of the in Europe, and on that basis, why does he want to negotiate a ceasefire? So I think he's just going to keep drawing it out. Actually,
yeah, I think. Last time around, Trump did a good job. Did a good job with North Korea, didn't he? Or he certainly managed to present that he'd done a good job with North Korea. I think there's something rather more intractable with Ukraine.
What about in the same sector? Let's move to Chemring, which does basically energetics, and I think it does plastic explosives, but mainly the energetics go into sort of ejector seats and to missile separators. Obviously, it's got a massive order book at the moment, particularly as Europe totally rearms, and I think it's going through quite a lot of internal capex to build new facilities. As well, also does the sort of like the more traditional flares that go out the back of helicopters and planes and stuff like this. I get similar sort of thing. It's doubled its market cap in the last 6 months, and it gets to a point where you say, should you sort of top slice or take some profits? Trading at roughly 28, 29 times PE. So again, not cheap. But if you're a shareholder, it's difficult to sell something being so successful.
I think it does, as you quite rightly point out, specialist in energetics and chaff, but also has a very interesting arm in Roke, the sort of the cyber warfare side of things, based down in Leafy, Hampshire.
Yeah.
So I think that you've got here a very interesting play, not just on increasing defence spend or across NATO, but also you've got this new development, quite a fundamental change in how war is conducted, and that's playing to the strengths or the service capabilities of Roke. So that's why it's been proven very, very popular. If you did get in early, I think certainly perhaps top slicing this one, and enjoying some of the profits and putting them elsewhere, perhaps into a different sector. But it's an exceptionally well-run company and got a great balance sheet, wonderful management team, very, very solid, very clear thinking, great emphasis on operational execution, and not blind to, sort of not married to their core excellence, which was energetics and chaff, remains an important part of the business, but also, like I say, you've got Roke, which offers another runway of growth over the next few years.
Yeah. Do you think M&A is going to be possible in the sector, given where the government is? I know the CMA is supposed to start relaxing and to moving on to sort of growth, but you did get Ultra Technologies taken out, Ultra Electronics taken out a few years back. I think it's private equity. And you also got Cobham as well, which was always been sort of thought of as a potential, buyer. I think it's private equity roll up. How do you see M&A in sort of defence? Is it a no-goer though because the government, or is it still a potential upside?
I still think there's a potential upside. I don't think Chemring and Cohort are necessarily in play, but now that I've said that, there's going to be a bid this week for one of them or both of them, isn't there? So I think there is significant national security grounds, concerns around both of those. If there is, I'm sure with the Cobham there will be some appropriate sort of guarantee about behaviour, but hey, it's a murky world once they go into the private sector, and you combine it with a sort of a military industrial complex with the US, isn't it? That's an imponderable.
Yeah, I know. Yeah, no. I mean, with so much sort of focus now on national security, then it would get a lot of scrutiny. Okay, we've got Ben Sharman. He's asking about bigger FTSE 100 company Diageo, the spirits maker. It's got Guinness, obviously, and Johnny Walker and Smirnoff, and I think it's also got these tequila brands as well in the States. Being hit by the tariffs out in the US under Trump. I think last time I saw it had about 150 million tariff potential hit, which I think they're going to mitigate. And then double whammy, they had one of their competitors, Brown-Forman, last week. I saw in the US came out with a pretty horrible trading update, a profit warning. Does it get a point when this becomes sort of like value territory at all? And I know it maybe not something you're familiar with, but just wondering on whether you know much about the spirit sector.
No, only from personal experience at an appropriate time on a Saturday evening. Certainly not during the week. But no, I think this one's got the potential to become a value trap.
Yeah, okay.
You're in it because it's cheap, and it still remains cheap. You've got uncertainty on the tariffs. You've got a weak trading environment, or consumer sort of not feeling too good about the world. It's not going to give themselves a treat. Perhaps they've traded down from a spirit to a beer. That chart is quite is rather eloquent. What is it? A 3-year chart, 2021 by the look of it?
No, it's a 5-year chart. It obviously topped out when everybody was on the sofa watching box sets from Netflix, sipping their Johnny Walkers.
Well, there's a time and a place.
Yes, I know. Yeah, no, true.
But I think I wouldn't be dabbling in that one.
Yeah. The one thing I'll also add, Ben, is that I think the debt to EBITDA ratio needs to come down a bit. I think it's over 3, if I remember rightly. And the other thing just to think about is look at the last investor conference that they did. I think it's a video on something, and their chair lady, or sorry, their CEO chairwoman, she basically talked about the biggest growth driver. And the thing she was hitting out at was smaller bottle sizes, and I was thinking, really, is that your biggest growth driver? Just reducing going from a big bottle to a smaller bottle? And I was thinking, wow, that doesn't sound it's full of innovation, but I could be wrong. I'm sort of like had a good look at this, and I'm with Ian, to be perfectly honest. I wouldn't be. It could be artificially looking at it as a soup. I mean, it's no doubt about it. It's got very good brands, and it could be taken out. And I know Warren Buffett has talked highly of the company in the past, but to me, on the fundamentals, I think there's more headwinds than there are tailwinds. Actually, good. Okay, let's move to one which has disappointed last week, but fallen angel is Eagle Eye, which is basically a personalized promotions software company that sells its products and applications into groceries and supermarkets, things like Asda and Tesco's. It had those customers for years, also abroad into Australia and New Zealand. But the big news last week, unfortunately, was that it got a cancellation for its largest contract out in the States, a US grocer that was sold through a US software channel that had bought a competitor previously of Eagle Eye, and then has now put in its own software, or planning to put its own software into this large US grocer. And I think, reading between the lines, the US grocer is somebody like Giant Eagle or something. But anyway, the shares got absolutely slammed. What's your sort of view on this? Is this a turnaround situation, or is this actually again something which might be a value trap, Ian?
I think it's the latter.
Yeah.
I mean, it's inescapable that the shares got absolutely clobbered, as you say.
Yeah.
After they lost an annual contract, as you quite correctly point out, of about 9 to 10 million pounds per annum. And what I like about Eagle Eye is that they've got a very strong balance sheet, something like net cash of 12 million pounds.
Yeah.
You've also got very high gross margins, something like 95, 96%, which has been consistent, which tells you that this is actually a true software story, which is absolutely scalable. And this contract loss was not due to a bad product. It was just that someone else got talk. And I think the market is so large for the digital package that Eagle Eye has spent the last 10 years or so, 9 years developing, as I think this is a good opportunity, if you like, these kind of situations, to buy a well-capitalized into a well-capitalized company with a great product set and great distribution, and it's highly cash generative. If it was not producing cash, or if the balance sheet was, shall we say, not as strong as it was, then I'd be saying, well, okay, there's the stock market's full of risk, and this sometimes happens. But I think this is a very interesting opportunity. It sort of make sure you have enough at the bottom time in this one.
Yeah. And do you think this is a one-off contract loss, or is this a sort of like something which may sort of recur? Is it? Go on.
I think it's well, of this magnitude, I think it's a one-off. I think in terms of, this is a growing pain of a company that's trying to deal with very large customers, sometimes slow moving. So sometimes there's a perception that there might be problems with implementation. But what they're aiming to do in terms of be able to revolutionize the systems of some very large successful retailers, that takes time. So if you're going to dip your toe into the water, such as Eagle Eye, you both need a long track record of excellence, which it's got, as well as proper implementation with large customers. Now, these customers are conservative, and also they will have adopted sometimes the technologies 20, 30, even 40 years old in the retail technology. So it takes a lot of work to be able to make sure all the systems are talking together, as on each implementation, of course, is completely different. But I think Eagle Eye's been doing it long enough now that they can actually say, well, we've got a track record of being able to deliver value. Look what we've achieved with these customers. Of course, it's never good when a customer turns around and says, no, we're not going to go for you. But that's business. And I think there's plenty more to go after in terms of business wins in Australia, Canada, and potentially United States.
Yeah, no, I'm with you. And I think also they've inked that deal with SAP, haven't they, as their next sales channel. So SAP have decided to not develop their own personalized promotion, so supermarket application. They've decided to lift and shift Eagle Eyes into its own sales channel. So it will be selling as a reseller Eagle Eyes software going forward, which says to me, given that they're the world's biggest enterprise customer, B2B, for large businesses,
not bad, is it?
They've kicked the tires and they realise it's best in class. So that'll be my take on it. No, I'm with you. Okay, good. We've got Johnny's asking about Hollywood Bowl, the 10-pin bowling alleys they've got in the UK, #1, and also branching out to Canada. Came out with a sort of like a tepid trading update a couple of weeks ago, sort of derailed by the warmer spring weather as everybody went out into the beer gardens and had their Guinnesses and lagers and stuff. I guess what's your sort of view going forward of this business, because it's got a bit to do in the second half to make its full year numbers?
Yeah, I think I love this business. It's an absolute crackerjack of a business.
Yeah.
Any weakness due to sort of short-term effects, such as the weather and people not going off to the Hollywood Bowl, but sitting in the garden or whatever, I think is an opportunity. This is, for me, you take a long-term sort of 5-year view with this one. The management team is excellent. You've got the CFO, Lawrence Keane, I think his name is. He's over in Canada doing the refurb and expansion program here. You've got an excellent team here doing the refurb and expansion program in the UK. You've got wonderful systems. They run it a bit like an airline, but the aircraft never takes off. So you've got sort of your busy times, which they've learned how to charge full whack for. But like in any airline, it's not so much the peak that you worry about. You've got to get that right, okay, which is what Hollywood Bowl do. But it's also the shoulder periods. Yeah. So sort of 11 o'clock or 4 or 5 o'clock in the afternoon, 11 o'clock in the morning, and when it is raining and it's half term, mum, dad can take the kids. There's special deals on to get access at those times. So you're not climbing up the wall with your children with frustration as the rain falls. If the rain doesn't fall, well, you go off into the park or do something else. But look, over a period of 4 or 5 years, you're trying to tell me we're going to have a spring like this in 2025 all the time.
Yeah.
I was watching Clarkson's Farm yesterday. 2024 was the wettest spring since 1872.
Yeah.
And they were reading about people rowing in railway ruts in 1872 to practice their rowing. So look, the British weather is just so variable.
Yeah.
And given its variance, given the weather's variance, Hollywood Bowl's operational excellence, this is just a company that will grow and grow and grow. Sometimes it will have fades. It will fade out of fashion in terms of the share price, and other times it will be an absolute darling. At the moment, it's a bit of a wallflower. No one's asking it to dance, but we only need a bit of cold weather, and it'll come back. In terms of achieving numbers, I think it's a very careful management team. I think they've been on the market 9 years, 10 years now. Be very careful with their guidance. So I'd be quite happy to be getting stuck into this one for a bit more.
Yeah, I mean, very good margins, isn't it? Sort of 24% EBIT margins actually forecast. Yeah. So it's a highly profitable business, cash generative. Must be a target for private equity, I'd have thought. You wake up one day and they'll be on the 10-pin bowling alley.
Yeah, Yeah, they'll be the pins on strings.
Yeah, I know. Okay, good. We've got another one. Another fallen angel. Tony's asking about hVivo, which is basically the challenge trial expert in the UK. It helps big biopharma companies test their new vaccines and antivirals in effectively their sort of like their clinics or their hotel down in sort of get patient hotel. What I'm saying, down in London, and the idea is that you inject or a student will contract a certain illness. They'll come into it, and then they'll basically they'll test out the vaccine in very secure conditions. Anyway, they came out with some. They've been hit a bit by volatility in the sector. They lost. There's been a deferred contract, a couple of deferred contracts, which we pushed out, or even I think there's one's been cancelled, which has put unfortunately a bit of a hole in their order book, which brought down their sales expectations. The shares got again hit, but then you got last week a bit of director buying. What's your latest on hVivo? The whole sector with biotech has been hit by this uncertainty from Trump.
Yeah, I think it's quite an interesting point, because it's, as you say, it's in the biotech sector, but it has the advantage of having sales profits and real money on the balance sheet, rather than the concept of of something happening in a few years' time. I think this is again a great opportunity to get involved on a 3 to 5 year view, because human challenge trials continue to be very important in the drug development process, and I think this is perhaps more sort of the inversion of the take-o trade we were talking about before. Whilst there might be uncertainty in what's going to happen with the structure of spending, a lot of hVivo clients still do need to develop drugs, regardless of who happens to be in charge in the White House, or spraying around policy changes. There's still poorly people, and there still need to be developments for drug companies to sell into not just the United States, North America, but Europe as well. And the human challenge trials, which hVivo is amongst the leaders in, and the Mo Khan, the CEO, runs a very tight ship, having an awful lot of experience in contract research organizations early on in his career. I think putting hVivo into an absolutely fantastic place in terms of developing it. We got, as you say, you got the patient hotels or hospital. I think they call it patient hotels, don't they? In Canary Wharf, I think it is, or
I think it is Canary Wharf. You're right.
Because it was in it was in Whitechapel, the first one, wasn't it?
Yes, that's right. They've moved to new facilities.
Yeah, moved. And I think this is a very, very strongly run business. It's had a bit of a setback, and I'd be following the directors.
Yeah. Well, I mean, certainly on valuation, I think before the profit reset, I've got a sneaky suspicion they had an EBITDA expectation for 9 million, and their biggest, not the biggest competitors, but the sort of big dogs in the CRO sector are IQVIA and Icon, and they trade at sort of 8 to 10 times, even after their share price has been 8 to 10 times EBITDA. The market cap of hVivo is about 80 million as of today, and you say they've got around about 25-30 million of cash. But 80 million, if they ever got back to where they thought they would be, sort of 9 million, then if you only put basically, sort of 8 or 9, 10 times multiple on it, and the cash then on top, then you would have significant upside with the growth. So
absolutely,
yeah. Certainly something to look at. Okay, good. We've got Lemon Physical. He's asking about oil and gas services business called Ashtead Technology. I think it also does renewables. It's largely submarine equipment in the North Sea and around the world. Shares of Were Darling come off. I don't know if you know anything about this. It's more of a rental type of model based out in Aberdeen, I think. I don't know if you ever had a look at this one at all, Ian?
Yeah, it was an absolute storming float from, I think,
yes,
Dr. Numis, wasn't it?
That's right.
Yeah, I think the rental, it's a bit of a giveaway with the Ashtead, the first half of the
Yes, that's
time
right.
also.
Yeah. Yeah.
But it was a darling.
Mm.
Um, will it come back? That's a tricky one. I think um, it's such a there's such a miasma of claim and counterclaim. I
Yeah.
think it's safe to say, isn't it, on net zero? There is certainly a lot of depending on which newspaper you read or which news channel or how you choose to consume your media, there's a lot of uncertainty or there's a seeming unwillingness to realize that not everyone is we're in a one-person race that we've set to deindustrialize and go for net zero by 2030, and you've got 840 coal-fired power stations being constructed in China to power its
That's crazy,
manufacturing.
isn't it? That's crazy.
And the UK is responsible for 1% of emissions. China and the US, I think, are each responsible for about 30%.
Yeah.
And that's not source Iain Staples. I think that's the United Nations Energy Authority. So blame them, not me.
Yeah, I think India's another big one, isn't it?
Yeah. So you got these, industrial behemoths slugging it out, and now petrol. Their power prices are about £50 per megawatt hour. I think that's what it is in China.
Yeah.
And we got a crazy system where it's 250. So, given you got this huge top-down. My point is, you got this huge top-down economic direction that is hurting not only British manufacturing, but also the drive to actually want to do things in oil and gas or renewables means that I think it's so entrenched in terms of how to develop it or how to actually do something in this industry, is that whilst Ashtead is a very tightly run, excellent company, you're not going to see it return to darling status while there's such a lack of coherent thought about the UK's own direction and how it's going to compete overseas with its own manufacture. That's why I went onto that huge. Sorry, it sounded like I went off on a tangent.
Yeah,
but I don't think. Sometimes you have to think what everyone else is going to think. And with Ashtead Tech, everyone will just say oil and gas. Well, there's people in charge that just think we should be living in wigwams. And
you're referring to Ed Miliband, I guess.
Yeah. If you can afford to live on Hampstead Heath, you're very lucky, but not everyone can. So.
Yeah, I'm with you. I think the price looks very attractive. It's trading at less than 10 times PE. EBITDA ratio, it's just looking at it now, is 5.3 going forward, which is for a growth business is very, very cheap. Plant equipment and got some good niches there. And I would say, just watch out. Eventually, I think the government will do a U-turn on permitting out in the North Sea. And given where the oil price is, they'll remove the energy profits levy, that windfall tax as well, because it isn't making them any money anyway at the moment at the current levels. And they'll do it as a political sort of like demonstration of support for the sector. So, this one will make it, will do really well. So it's certainly something on my radar to pick up. I don't own it currently. Do you own it at all, Iain?
I did.
Yeah.
I had backed it at IPO. And was very happy with it. I think the management team are very good, very strong, very straight. They, like all good management teams, gather the data, then make the decision, rather than the other way around. Like our political leaders seem to do it the other way around. So, no wonder the share prices come off when they, why act in an economically rational manner when you're trying to second guess people that don't. But hey, we should have. It's a bit early on a Monday for a shot of vodka. Make me really cross.
No.
So Diageo.
I know. Yeah, it would be helpful to boost their profits. We're going to switch. Let's switch sectors. Let's go to automotive, but in a really sort of high niche one. We've got Deborah. She's asking about AB Dynamics again. Another real sort of like darling stock, come off a bit because people are worried about the automotive sector globally, particularly the suppliers in there and the OEMs, and with the lack of growth currently with EVs and the dominance of the Chinese. Basically, AB Dynamics help all the regulatory testing, crash tests and electronics, and making sure it's all safe and passes all the regulations. How do you see this one going through? It still isn't cheap, but I guess it's lower than historical sort of like margins at the moment. How do you see it?
I think there's some companies that never look cheap just because they're so good. Yeah. And I think that's this for me is what AB Dynamics is.
Yeah.
Tony Best, hence the AB, that's where it comes from.
Oh, okay.
He was the founder. He's comfortably in his dotage these days, but great engineer, set up testing rigs, and really the company adapted very quickly and very successfully with technology, with the advent of EVs and all the new testing regulations. So for me, this is a buy and forget. You know, I mean, just think of the numbers. The interim divvy was up 20% because of its operational excellence. Net cash was 27 million. Revenues were up 11%. Operating margin up 160 bips to 18.6%. And of course, they can afford to, because of the operational financial excellence, new product development continues apace. So for me, this is a real beauty down there in Chippenham.
Yeah. No, I like it. I think with all the changes in the models and stuff like that, particularly in EVs, I mean, if nothing else, what has happened with technology, it's reduced the time to launch new markets. It's forced greater innovation on the OEMs, and on that basis, then there's going to be more models, less sort of like products, sort of car platforms that are there for 20 years, and therefore on that basis, more cars are coming on. There's going to be more testing on the regulatory, and with things like autonomous vehicles and stuff like that, then they've got to be super safe. So,
yeah. The thing is, you can they're so good they can sort of set up a rig for either a Volkswagen, an Aston Martin, or a Formula One racing car. So if you want to, you can. They actually, I think they did a development work with Williams a few years ago.
Yeah,
and they got Formula One racing drivers down into Chippenham and put them in the rig.
Yeah,
and said, right, okay, you're at Monza, off you go. And the guy said, yeah, this is almost like being in an actual Formula One beast.
Yeah.
And started talking about how they set up the wheels and the tires and all that kind of stuff. And the engineers were, golly, it's just not hot air that you guys talk. You're quite something.
Yeah, good. Okay, in the same sector, we've got Luke. He's asking about CT Automotive, which is much smaller business, does sort of interiors. I think things like cup holders and sort of like cushions and all this sort of stuff into cars. Shares have performed very strongly of late. They're up actually and almost double from their lows in April. I don't know if you've ever had a look at this one. A lot smaller though.
I don't know that one very well. But
yeah, okay. It's trading at about for Luke, I think it's trading, I'm just looking at it now, PE ratio of 5.5 times, so still very cheap. All I would say is that have a look at the USPs of their product and how much pricing power they have, and then whether they're going to get impacted on tariffs supplying, say, the OEMs into the States. And when you put all that together, personally, I would say automotive is a sector that is really, really tough if you haven't got something really unique like an AB Dynamics, or you've got, sort of like autonomous driving systems or something really niche, because this is actually worldwide huge over capacity in the whole automotive sector. That'd be my take. Okay, good. Let's move to another stock which has been beaten down. We've got James. He's asking about big big technologies, which is Buddy. Now, this one's gone through a lot of trials and tribulations since we last spoke about it. It's changed its CEO, the CEO, which was Sarah Murray, the founder. She got put up into or got caught up in a legal dispute or a legal wrangle with previous shareholders, and then the CFO Darren Morris stepped up to become the interim CEO, and then shareholders decided to appoint two independents, a CFO and a new CEO. Ian, I can't remember what his name is. Johnson.
Morgan.
No, it's Ian Johnson, who's now the
Oh,
new
sorry.
CEO.
Yes, it was. Yeah.
New CEO. And they put a freezing order over the old founders' assets of 320 million. They've done that in the last month or so to protect the company from potential litigation from minority investors. I don't know whether you've ever had a look at this one now. It did win a small contract, which was good, in Northern Ireland as well, for electronic tagging, which is where its sort of core business is. And I know you discussed last time that one potential opportunity is to add on the alcohol monitoring as well, which they're now winning contracts in the States on. Any thoughts on big tech at the moment?
Well, it's I was agog when I read the RNSs word by word very carefully, describing the events around Sarah Murray and the questions about relationships with shareholders. I think the litigation has been parceled off or sort of barricaded away from the operational part of the company, and but unfortunately that has had an inevitable impact on the perception of the company in terms of what it can do, which I think is very hard, and I think it's a great opportunity because I think fundamentally, as I've said before, I think chatting with you, this company offers a set of products which unfortunately are only going to increase in demand. You can see that if a state doesn't spend money on constructing prisons 10, 15 years down the line, they can be full, which is where we are at the moment in the UK. You can have troubles like you do in Venezuela or the United States with your prison population, and you sort of reap the whirlwind of your thing. But I think the good, excellent point here is that basically you've got a device company that you can sell to large organizations in countries and then develop a recurring revenue stream, both from the renting of that or the selling of that product, as well as the software surrounding it. Now, Mr. Johnson, I'm obsessed with Morgan, sorry. Mr. Johnson, he did an exceptional job at Niox.
Yeah, that's right.
Which is a medical device company for detecting, I think, I can't remember if it's nitric oxide in exhaled breath. It was called the Pheno detector, which meant you had asthmatic condition, I think, in your lungs, obviously.
Yeah.
And did an extremely good job there with a device company which he sold to large health organizations around the world to develop a recurring revenue stream and the products and services around that. So I think you've got one of the best people in situ to fix any sort of perception problems. You know that he'll have a team, he'll build a team around him that will be very strong operationally, great attention to detail. And I get the feeling he might well be on a plane quite a lot, talking to existing customers and potentially new ones to build up the company. I think the fact that also you've got an awful lot of demand, as we've already talked about, now is a very interesting point in the company's development. The legislation has been ring fenced, so have a look.
Yeah. Do you think Ian Johnson is a permanent fixture there as CEO, or essentially is he sort of keeping the seat warm for somebody else who's got a bit more sort of like custodial prison sort of experience?
I think it's more sort of the similarity between NIOTS and big tech really struck me when I read that he was going in there. So I think it's not so much keeping the seat warm; it's actually they've sailed into a gale. Metaphorically speaking, the CEO at best is being found drunk at the wheel.
Yeah.
So the CEO is being lashed to the mast and told to be quiet. And they've the first. Magically, it's obviously a Disney film. A first mate has been dropped in, promoted to captain, and he's I think an excellent operator. So he'll take the ship out of the storm. But he's the sort of character that really likes getting to grips with a company when it's a bit on the wibbly wobbly.
Good.
He'll sail it out. He'll make sure it's all ship-shape Bristol fashion, and then perhaps someone who's more of the humdrum quotidian stuff of selling rather than selling it out of a gale. I couldn't think of a better person that to lead the company in the situation it's found itself.
Fabulous. Okay, good. Right, well, let's again switch sectors, go to financials. We've got Claire. She's asking about Funding Circle, which basically does B2B loans for SME companies across the UK. Had a bit of a business, I think, in the States, which it sold last year, gone through a bit of a turnaround. Now it seems to be sort of steering in the right direction. It's sort of like a challenger for loans. It doesn't actually do the loans itself. It basically acts as the conduit between institutions who want to provide capital to the SMEs, and then it matches that using its credit engine to be able to push it into small and medium-sized companies. Came out with had a bit of criticism from the Times, I think, an article that was saying that it sold a couple of its loans to a third party who was struggling to enforce the conditions on the directors, which took some of the air out of the shares. How do you see this one going forward in Funding Circle?
I think it's a very good platform software company. Basically, I think it shifted into profit following the divestment of the US operations last year. So that was a very, very well received. I think it was sort of that low point at 2024 that's on the chart there.
Yeah.
I think the credit extended. It grew almost 50% to just shy of 2 billion. Revenues up 23% up 2023. So there's certainly demand there. I think with these any sort of credit company, there's always some issue. There can always be some issue around either the credit scorecards about how they assess the applicant for credit, or the legal position that they can actually go about enforcing the conditions when things go awry. I think with these sorts of things, the T's and C's change very quickly, typically over a weekend if there is a problem that's highlighted in the Times.
Yeah, okay.
I think the lawyers do very well out of it.
Yeah.
Changing the 10 pages of T's and C's. So I don't think it's a recurrent problem. I would be very surprised if, I think it's Lisa Jacobs, the name of the CEO, isn't it?
Yes, that's correct, yeah.
Whether that be allowed to continue. I think the fact that they're also quite canny with their marketing. There's, for example, they sponsor, I think they sponsor the rugby, don't they? The Gallagher Premiership.
They could do, yeah.
So they're everywhere on the television. Probably football's far too expensive, so they've chosen rugby union. So I think you're getting a brand awareness. I think they actually supply funding to Jamie George, one of the England players. I think he's got a chain of gyms that's been funded by Funding Circle, or part funded by Funding Circle. So I think this has got a way to go. I think it's the ease with which this credit scorecard takes in all the information from various sources, not just from the company's house or the information you give the computer, but it can be a decision within an hour, depending on your request. So I like Funding Circle.
Good. Okay, let's switch sector and go to industrials. We've got Keith. He's asking about Gooch and Housego, basically, which is a photonics specialist around the world, puts it into defense applications and aerospace, which is really growing strongly. Things like sighting, a sort of like equipment and photonics to be able to do sort of laser guided missiles and sort of telescopes and stuff like that. Also, its biggest division, I think, is industrials, which has been struggling in terms of the semiconductor cycle with destocking, and then into life sciences, cosmetics as well. Shares have actually done pretty well of late. They've sort of turned around, and they came out, I think, with some quite encouraging results just recently, saying they got a high visibility over their revenues going forward. How do you see this one going forward, Ian?
Well, I think photonics is a very interesting future, because you basically can't hack light. So in terms of cybersecurity, it just solves the problem. I mean, it does present other rather very interesting problems if you ever enjoyed your physics at school or university. But really, in terms of the sort of the next generation of products involved in defence, Gooch and Housego is going to have its components and subsystems in there. It's got a new guy. Well, he's not so new anymore, but he's been sort of carefully bolting on some acquisitions. Most recently, you had revenue growth of 8%, constant exchange rate, organic. Certainly, whilst they are being careful with their acquisitions, the net debt to EBITDA still remains about 1.3 times. So the balance sheet is sensible, and you've got unchanged expectations, which I would find quite interesting, because I think actually such as the demand, as we've already spoken about several times today, for defence, I think Gooch and Housego is in a sort of a not so obvious but a very strong position to do very nicely out of the increase in business.
Yeah. What about the gross margin on it? That's always been an issue, that also an area that I've had a bit of concern on, in terms of it's got very high tech, high value added sort of niche sort of like expertise and technology, but it does seem to be quite a price competitive space, because the gross margins are only like 30%.
Yeah, I think that's the manufacturing. They've been trying to rationalize that. They've moved a lot of stuff, unfortunately, out of Ilminster into China, I think, to try and get that gross margin up. But really, I think it reflects the physical nature of the stuff they actually make. It's not software. This is actual pieces of kit that they have to put together, and they're quite technically challenging. But in terms of the excellence, they work with the Livermore National Laboratory in the United States. So you got some really top end clients.
Yeah, no, the shares definitely seem to be now taking off to stop the pun. Apologies for the pun. Okay, let's move to Cranswick, which basically does pork and food for the supermarkets like Tesco, Sainsbury's, and stuff like that. Prepared foods. Had a really sort of like damning press report a few weeks ago. I think it was in the Daily Mail about sort of like conditions of animals, how they're treated at one of their farms. Shares now seem to have recovered. But, how do you see this one?
I think this one is sort of a buy and forget.
Yeah.
It's a quality long-term compounder. So the excellence of the management team, both in beef and pork, and how they think about allocating capital to improve returns. Really, it's just that sort of virtual circle of effective capital investment, but throwing off new cash, and that's reinvested. So the recent prelims, 48 bips increase in operating margin, to 7.6%. If you've got a long-term 10-year deal with Sainsbury's, you're never going to have high margins. So I think it's important that you look at cash flow conversion and ROCE with a company such as this. But you've got cash flow conversion of 102%. So it's very, very tight there. ROCE of 19%. And because therefore you sort of very careful about how you invest your capital, you think very carefully about about how to use your capacity, use your costs in a very tight way, or keep a very tight rein on your costs, whilst at the same time having new products in terms of, sort of dressing up Percy the pig in Sainsbury's range or other customers.
Yeah.
And I really do think this is an absolute belter.
Yeah, it's trading at 19 times PE, so it's not cheap nowadays. But would there be a point you'd sell it at all, or is it basically just say even though it might appear to be sort of expensive for this type of business, it will grow into its valuation?
Yeah, I think it's just a core holding. I think you'd, I mean, needless to say, you'd watch the cash flow and the ROCE, but it's that sort of endless focus on efficient allocation of capital. Either do we spend it, or if it's not any good, do we get rid of it? How can we change this? So we've got the abattoirs, I think, in Preston and Hull.
Yeah.
Two probably got abattoirs elsewhere. I don't know that well. And really, it's just the sort of from excellent relationships, deepening relationships with existing customers, product innovation, investment in operations, and it's just that just get that feeling that every single part of the business, they're constantly obsessed with efficient allocation of capital. How do I get the best turn out of the money that I'm going to spend? And then they watch it like a hawk to make sure that it goes not like, well, life doesn't always go according to plan, but you can sort of adapt and be very careful. You just get the feeling with Cranswick that there's the culture is imbued with that operational excellence.
Yeah. Yeah, well, they probably shut down that one farm, haven't they?
Yeah, it was. Yeah,
taking that one out. Okay, we've got another sector that's done very well this year is the is sort of REITs and real estate, and we've got Steve. He's asking about Sirius Real Estate, which I think basically does sort of multi-let properties out in Germany and the UK, things like offices, business parks, and industrials and factories and warehouses and stuff like that. Shares again have done pretty well of late. What's your sort of like your views on really just the REITs, but also if you know anything about the Sirius real estate at all?
Well, it's run by the founder CEO Andrew Coombs. Very good operator, very canny. He's been doing it for quite some time now, longer than even he probably cares to admit. But an extremely knowledgeable and extremely canny operator. You saw a 12% growth in funds from operations, a 6.3% growth in like-for-like rent roll. And they've had a couple of equity raises over the past 18 months, but they're quite open that they want to use that to a maximum extent before the next cycle starts. So he obviously thinks we're in a bit of a lull.
Yeah.
And what really piqued my interest as recently was, as I was putting together sort of thinking about what we might talk about today or whatever, and thinking about the themes in the market, it was defence.
Yeah.
It was quite an obvious theme, but Sirius being Sirius, they recently appointed a strategic defence advisor. He used to be a general in the British Army.
All right.
So there's an awful lot of sites in Germany that once were used by the Wehrmacht and the Luftwaffe, and for various obvious reasons, the German army is a bit of a, shall we just say, let's say, an oxymoron these days.
Yes.
But because of the shift, I mean, we in the UK whinging about whether it should be 3.0 or 3.5, but I think certainly for some countries in Europe, it's a seismic cultural change that they're actually going to have an army again. And I think Sirius is in a wonderful position to take advantage of that, because a lot of the sites can be converted easily, or were old army sites from the Second World War, obviously disbanded for very obvious reasons, succeeded in converting them, but now they can sort of use them again for logistics or supplies or whatever else. So here is a company that's very, very good at supplying multi-let space, but is also very aware, not just to the themes in real estate, but also to some rather large cultural changes that are going to take place over the next 5-10 years in Germany.
Yeah, there's definitely going to be a lot of extra sort of like facilities built for ammunitions and for defences and stuff like that. Yeah, no, exactly. Yeah, no, you're exactly right, and I guess they'll also benefit. I mean, the ECB reduced interest rates, didn't it, at the back end of last week, and now, presumably, with borrowing costs lower, then that's really good for sort of like real estate businesses. Yeah. Okay, good. Okay, we've got a follow-up question from Ben Sharman just on Diageo. He's asking about Fevertree, the cocktail mixer business. I think it needed to deal with Coulson Moores last year out in the States for distribution of it, sort of ginger beer and tonics and stuff like that out there. I don't know if you ever had a look at it. I think the shares have rebounded relatively strongly. I don't really have any thoughts on it at all.
No, I think Fevertree did very well when it's first launched, because I think it ate the lunch of Schweppes, didn't it? Because
yes, that's right.
I thought Schweppes was really strong, but actually Schweppes was arranged on almost on a franchise country by country basis. So Fevertree, with its organisation, just go and wipe the floor with it.
Yeah,
I think that is now passed. But apart from that, I don't know much about Fevertree.
Yeah, I mean, all I'd say, Ben, is have a look at the value on it. It's trading at roughly around about 38 times this year's PE, 32 times next year. So there's a lot of growth in profits, which is baked in. And yes, with a distributor of the size out in the States, then of course, and then you've got a really good chance to make some money. But you are paying up for a lot of that growth already. It might well be that it becomes a takeout target, though. Who knows?
It's just a fizzy drink in a pretty can. Don't forget that.
Okay. All right, then. Thanks very much, Ian. Before we finish, though, I ask all our experts about their favourite stock for the next sort of 12 months. Anything which we've talked about currently, or anything else that you'd like to sort of highlight to investors as sort of like something to put on your watch list?
Keller.
Oh, Keller. Okay, the construction guy.
Yes, the geotechnical.
Geotechnical, that's it. Yeah, that's it. Yeah.
Yeah, and this is another quality compounder. I've never ceased to be highly impressed by the CEO, Michael Speakman, who's overseen tremendous culture improvement.
Yeah.
In the term of his tenure, trading the latest period was very strong thanks to consistent operational and financial performance. And okay, I think there's a little bit of weakness in the US, but that was more cyclical than anything structural. Given the need to upgrade US infrastructure, Keller's going to benefit from that. What's
the barriers to entry into this sector? I mean, in terms of competition,
it's actually very complicated. You think it's just digging holes, but it isn't. It's sort of sea reclamation. That's a highly specialized task. Trying to, sort of when they were building skyscrapers in New York, they realized there's some very old granite that they could build. The 100 stories back in the 1930s, but they found out the hard way that they couldn't do it where in parts of Central Park, because the granite falls away. So whilst it might seem, oh, you're just a glorified hole digger, it's actually a highly technical task.
Yeah, and I guess it's the utilization of their equipment and their personnel, which is going to be the sort of the key, because at the moment in the States, the last 2 years, it's been gangbuster in terms of new factories and facilities and stuff. If that's soften off, then they could see some, I would have thought, some operating leverage sort of like push back.
Yeah, that's certainly possible, but I think I'd argue that would be the old Keller.
Yeah, okay.
I think the new, well, Mr. Speakman's been there quite a while now, but I think the old Keller would have suffered from that because they weren't measuring stuff or pricing what they call pricing jobs correctly, or they took on work to try and fill the utilization, then didn't didn't actually earn a proper return. Now I think they got the group far more efficiently structured and far better pricing, and they've taken out the let's feed the hopper regardless of the price, or not quite regardless of the price, but
yeah,
he's really taken a hold of it.
Good. Yeah, I mean, at 7.5 times PE and a 3.5% dividend yield, it's still very cheap.
Yeah.
Brilliant. Okay, well, thanks again, Ian, for all your insights and those share ideas. So thanks again, and look forward to chatting in about 6 months' time.
No, lovely. Thank you very much.